Hello and welcome to BQ Prime. I'm Hiral Dadia. One stock that is in focus today is Sona BLW Precision Forgings. Now, this is mainly on the back of the acquisition of 54% stake in Novelic for 40.5 million euros. To discuss the modalities of the acquisition, joining us on the show today is Vivek Vikram Singh, Managing Director and Group CEO at the company. Welcome to the show, Vivek, and a pleasure to speak to you.
Thank you, Hiral. Thank you for having me.
Always a pleasure. Firstly, congratulations on the acquisition. Vic, my first question coming to you is overall, clearly a 54% stake in Novelic is what we're looking at 40.5 million euros. We have already signed an agreement to acquire it. Firstly, what's the rationale behind the acquisition?
So, good question. There are 5 important points. So, it is one of the rare, if not the only, profitable and high growth companies in the ADAS sensor market, which is slated to become very big. Second, it has a unique wave or millimeter wave radar technology, which is patented and is best for in-cabin solutions for slow. Third, there is a great cultural synergy between the co-founders and us, and we are very alike. And for M&As to succeed, cultural values being shared is a very important thing, at least for us as a group. Fourth, I would say is this is one of the few companies we've seen, and we've done a lot of research, which is vertically integrated from chip design, semiconductor chip design, going up to the full signal processing software suite. So embedded software, application software, radar, antenna, and board design, and chip design. Very, very rare to have that in one place. And fifth, obviously, we also, this is public money and we are a responsible company when we have to allocate public's capital. It is EPS accretive from the first year itself. So it makes it that much easier financially. So EPS accretive while providing us a very high growth third pillar in our business, apart from driveline and motor. So yeah, these 5 points I would say is why we did it.
Right. So with this, one thing that we've seen is clearly that the company's strategy has always been in terms of focusing on high technology products, right, for the global markets. So yes, this does fit in onto that strategy as well. So from here on, if you have to look at sensors and software as a new segment for the business, what's the kind of potential that you're seeing out of it?
So great question, and thank you for recognizing what we are trying to do. So you're right. It is high technology, high growth with high profit. It's hard to do this balance, but we are trying very hard to stay on this cutting edge. The target, I would say, in 6-7 years, even if we don't do anything remarkable, the business plan that we've drawn out with Novelic in the last 6 months, we should be able to get to about $100 million size in around 6 years if we just focus on what we are doing today, which is in-cabin, ACAM, outside cabin, which is a product we call Asper, and third, continuing on our licensing and software services business vertical, that also. If we are able to do more with it, because application, and I don't want to bore you with technical details, but radar applications are many, right? It can have industrial, defense, so many other applications. Right now, we are only restricting to in-cabin sensing and outside cabin perception. That's it. But there are many more things that could come, even in just the chip design area. If you just take that one part separately, and with the Indian government's push on semiconductors, there could be a lot of potential there. But you don't want to over commit on that. I think for now, this is the business plan. Over time, things can evolve and go in different directions and become bigger, like we did with our driveline business. Initially, when we used to talk, we used to think, one day this could be 15-20% of our revenue. EVs already become more than 25%. Right. Sometimes things happen faster than we imagine. If future trends are, with us, hopefully we'll be able to do well.
Right. So overall, from the transaction perspective, now clearly the anticipation is that the transaction will close in the fourth quarter of FY23, right? So overall, from a fund perspective, We are funding it through internal accruals. What's the cash on the books right now? Number one. And two, in terms of the tranches, how is that divided between primary and secondary purchases?
Sure. So it is a mix of primary and secondary, and because of the founder's request, we are not explicitly divulging how much is primary and how much is secondary. It is a little sensitive to them and how much each one is getting, etc. But 40.5 is the total amount. First year at closing, we pay 60%, so that's around 24 million. Then 8 million after 12 months, and the last 8 million at the end of the transaction. So yeah, we have more than 24 million euro in cash at the moment. I can't give you the cash balance closing because we're in silent period, but
Right.
yeah, it's well covered. Let's just put it that way. We don't have to take debt.
Right. So apart from that, overall, if you have to look at both the companies now, Novelic will continue to hold 46% stake in the company, right? And they will be leading the operations as well. So what is that synergy between Sona as well as Novelic that is coming together actually?
So more than synergy, I'd say it is an addition of management bandwidth. You know, all the time, actually, time is our biggest constraint as a group of people. There's so many things we could do with the kind of technology advantage we have. But there are 4 or 5 of us in the leadership position, and we can't add more than 24 hours to our day, unfortunately. And that time and energy becomes the biggest constraint. With these three, we are also adding the talent and capability. So we do some electronic and software business even in our existing motor and control business. So the controller module for a motor, of course, is a software product. The IMCM that we did for the active suspension system, that has 2 million lines of code, for example, per module. So if you have to write, you're already writing that kind of code, that capability exists. So there are opportunities to leverage that talent and vice versa in both the companies. We will want to operate it as an independent thing. We believe in autonomy for each of our business units. I think it also breeds entrepreneurship. We're all professionals, right? And to give someone the charge of a full P&L and tell them to grow it as much as they can without thinking of capital as a constraint, that does free you up and to become who you could. I think there are a lot of talented people in India, and if they get the bottlenecks of time constraint, management constraint removed, they can achieve a lot. And I think that's the plan. We're going to let the founders free to do more.
Right. So Vivek, do we see any synergies in terms of cross-selling between customers, etc.?
That's a good one. Yeah, actually, because of the origin of this business, Novelic and they're European. It's only 10 years old. They have primarily only sold to European customers. Our largest market, of course, is North America. So it's a very natural and attractive partnership because our customers are their biggest potential customers. So yeah, it is. That is the biggest area, I would say, where we'll all work together.
Right. And how does this actually change the P&L for Sona then at the end point?
End point, I'm just 43, so end point is very far away.
No, I mean, not end point in that way, but overall, from a yearly perspective, how does this change the P&L for the company?
So it increases our profit as well as profitability because they're 27% net profit. We thought we were very good with 15% net profit, but we now met people at 27. So it increases our percentage margins as well as absolute profit. It isn't a very big amount initially because they did 2.5 million euro last year. However, it will grow very fast over time. See, when our electric vehicle unit started or electric vehicle motors started last year, it was nothing. First year, we just did, a few thousand. Last year, we did 120,000. It actually grew very fast then because it's an upcoming industry and there's an inflection point coming. 2025, child and life detection within vehicles most likely will become mandatory in Europe. At that point, you'll have to buy and put these sensors. So that's when it will start growing. Short term, it is positive for sure, but not by a very, very large amount. In the medium term, it will become fairly significant.
Right. So what is Novelic's market share in their industry currently?
Hard to define because
Hmm.
in the autonomous space, the traditional OEM tier 1, tier 2 structure doesn't work anymore. So let's say,
Hmm.
I'll give you an example, and we're not, just for the record, we're not confirming or denying that we work with this particular customer that I'm quoting.
Hmm.
There's a Waymo, right? Waymo is not your traditional OEM, but Waymo is the one who will provide you with the autonomous mobility.
Hmm.
They will get the car from somewhere, they will get the autonomous module from somewhere. Now, that module will have a software part, a hardware part, and a chip. All three people can work in various permutations and combinations to actually supply that module. So, brand new world. I'm telling you, competition,
Hmm.
collaboration, customer, the boundaries are quite fluid now. So it's harder to define because what is the product? How much are you doing through software? How much are you doing through hardware?
Hmm.
It is hard to say. Everyone's using different sensors, plus radar, plus camera, plus LiDAR. All three sensors
Hmm.
will exist. So hard. But in radar, what I can say from a technology perspective, Novelic is the world leader in wave radar technology. Novelic is, I would say, head and shoulders above their nearest
Hmm.
competitor.
Right. And overall, from a revenue monetization perspective, will it be mainly through, say, directly selling through OEMs, or is there an avenue for licensing revenue in this as well?
Brilliant question. Actually, no, that nobody has asked me, but that is actually the largest part of revenue today. It
Hmm.
will become smaller as time goes by because we are now going to supply the whole product and
Hmm.
ship the software with the hardware.
Hmm.
Our customers are actually right now in Novelic everybody. So you could have the chip design firms are our customers, traditional global tier 1 companies or tier 0.5, I should say, companies are our customers.
Hmm.
Traditional OEMs are our customers, and then autonomous service providers are our customers. So, all for our customers. Right now, the licensing model was more favored by Novelic because bootstrapped company, no external
Hmm.
funding, etc. So, licensing gives you that freedom that you can continue growing. You have a set revenue, and without much investment, you can keep growing every year.
Hmm.
We are going to also start, the product revenue is small right now. We want to grow that out much more. So the business model changes, but yeah, licensing will still remain a significant revenue stream. But good question.
Thank you so much. Vivek, my last question to you is, overall, is there a call option on the remaining 46% of Novelic stake? And is there any intention or an open-ended agreement which states that if there is an intention to acquire the remaining stake, there could be conversations that could go on?
So neither. We
Hmm.
don't have a call option, and it is intentional. We are not. We know what we are not. Also,
Hmm.
we are not chip designers and embedded software guys for radar.
Hmm.
We need them to go along with us on the journey. When the time comes that they feel that the potential of this business is, by the way, they are also in their early 40s. So
Right.
there is no hurry on either side. We are all young. We think we can make this
Hmm.
a very big company and then, earn the respect and value that this business deserves. And if at that point, at some point in the future, it is needed, sure, we have all options are open. We could list it as a separate entity somewhere in the US or in India or whatever we want to do at that point. We could buy them out, they could buy us out, we could together sell to someone else, we could get a third party also to invest with
Hmm.
us. Anything can happen. I think it's too
Absolutely.
early. First, we want to grow it to where it should be. It's such a beautiful opportunity in business. How many businesses that are growing at 50% CAGR, have
Absolutely.
27% net profit, and are the technology leader of their field?
Hmm.
When you have that, you want to first make it grow to its potential, then we'll see kya karna hai. But That's a question for much later, I would say.
Absolutely. Thank you, Vivek. Thank you so much for speaking to us and giving us those details in a candid conversation. Congratulations and good luck to grow the baby.
Thank you. Thank you. Thank you. Thank you.